Alrighty, hello everyone, and welcome to TradeFinder Live. Great to be back with you all during this trading day and during trading hours. Do want to apologize for the late start. I'm having a power outage issue in my area, and it's hopefully back online now, but there might be some service interruptions, but Rob will be able to take the wheel if that does happen. So again, apologies for the late start there, but some things are out of our control, such as Mother Nature. So let's get right into our disclosure disclaimer agreement. As always, main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing's to be taken as personal investment advice. It's always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like. That's the main point to take away. Other than that, Rob, let's get right into it.
All right, sounds good. Thanks, Zach. Sorry to hear about all your issues. I know you have some weather in the area, and people that have been watching the TV saw the rains in New York and how it affected the subway, et cetera. So, yeah, weather issues everywhere. The unfortunate incident that happened in Texas. So, Mother Nature is flexing right now. So, um, always got to respect Mother Nature. Let's take a look at the chart of the S&P. Hopefully everybody's seeing the screen now. I did transfer it over. I added this over the weekend in the U.S. market update, the ascending pennant pattern. I know that this is a busy chart. It's too busy for me. I don't like having all this stuff on there. I like cleaner charts so I can see the patterns, but just highlighting the amazing accuracy that these zigzag patterns have had ever since the February highs. But I will be taking this off. This is the last time you'll see it. It won't be on the U.S. market update this weekend. We'll clean it up a bit. We'll still keep this pennant on and see what happens here. And just a couple of notes if you haven't been watching any of the videos lately, just note that with all of these zigzag patterns, there were 4 C wave extensions that all came right to the February high. High probability we were going to go there. We did. And now, how far up do we go from here? All these fib levels here are all various extensions from those 4 zigzag patterns that all converged at the same exact spot. So from that point, we look to figure out, does one of these fib levels act as resistance, or can we power through them? I think that maybe it might be a little bit of a bumpy road as we continue to move higher from here. But then the AI signal from the data scientists at the Hub organization is giving a 62% chance that we hit 650 on the SPY. We really like the signals that are 75 or above. If you're not familiar with what I'm talking about, you can go to hubb.com, get a free copy of this software, free Elliott Wave, and then you have an opportunity to subscribe to these AI signals if you want, but the software itself is free. When you take a look at this level here, we normally like readings, as I said, of 75 or above. So that's why this little end of the pill is gray. So it's still better than a toss of a coin. We'll watch and see with this ascending pennant pattern. They tend to break out. As you know, I like triangles better than pennants. It isn't one of the patterns that I would put a strangle on, etc. But it doesn't mean they don't break out. I just prefer triangles, and there's usually enough of those. So, are we going to break to the upside? That's what I asked in the U.S. market update over the weekend, just to give us your idea. Is it going to break to the upside? Or are we going to have a FOMO, fear of missing out, and rise up and hit this target? Or are we going to break to the downside and start the wave 4 in this 5-wave pattern? And I would say the majority were results were to the downside, which not unexpected. This has probably been one of the more hated rallies that we've had coming off those April lows in quite some time. A lot of people still feeling like things could go or should go to the downside. The CPI came out today, and the reading was 2.7%, which is above May's reading of 2.4. So a tick up in June. The month over month reading stayed in line at 3%, but is just that little bit of a tick up enough to stop any sort of, and I've been opining over the last few days, could the Fed actually surprise the market with a rate cut in July? Don't think that's going to happen now. Didn't really think it was going to happen before. I just kind of thought, well, there could be a chance when I was adamant that there wouldn't be one. With the other Fed governors breaking ranks a little bit, maybe they were going to have a spirited conversation in the meeting room of the FOMC, and perhaps they could surprise the market. I think that would have given us that upside spike to the 650 target. But again, I don't think the Fed is going to do that with that number based on the comments around that reading. People are still concerned that we haven't seen the effects of the tariffs yet, and that's been Chairman Powell's comment all along, is the reason that they haven't cut yet is they just want to make sure that we aren't going to see too much of an inflationary impact from the tariffs. Most people, economists that I follow, seem to think that probably going to be a little bit of an effect, but it'll be minimal. It won't be significant. But is that enough to keep the Fed on hold? And I would say it's probably likely now that they wait and take a look at where things are in the September meeting, because by then we will have had a better idea of whether or not the tariffs are importing inflation. All right, so that's the S&P. Let's go ahead and take a look at the chart of the VIX, which up about to 17 now, holding that 15 level. And my comments here on the VIX is that normally in the summertime, you go through the summer doldrums and the volatility is lower, and therefore the VIX is lower. A reminder that last summer we stayed around 12 and a half, the low end, that low trend line there. And then we come back here, we're at the medium line of this channel that the VIX has been trading in at 17 and a half. And then the upper end has been right around 22 and a half. So we're testing the upper end. We've come down from the highs, but are we going to break that level? If we break to the downside out of that ascending pennant pattern, then obviously the VIX is going higher. If we do break to the upside out of that, then I think we break down below 15 and head down towards 12 and a half. So still having slightly elevated volatility, not too significant from where we were before, but a little more elevated than where we normally would be this time of the year with normal conditions. And we don't have normal conditions with all things going on with pressure on the Fed, tariffs, etc. Just enough to keep the VIX just a little bit higher. Looking at, pardon me, the dollar, which I think is acting really well right now. It's holding in this range right around 97 and a half. As you know, I didn't want it to break that level, but the fact that we've come right back up and tested it, as long as we can stay up here, I'm happy. I really don't want to see it go to 92 and a half. You guys know all that. So I don't think I need to expand on that again. I talked about pretty much the same thing every time. So let's get to the bond market, which matters a little bit more at this point in time. And you can see this bar that we've had today where just as a quick recap, because I think this is important, and the importance of the bond market to the equities market can't be understated. And then we go through this level here, or can't be overstated. What would be the correct English there? Can't be overstated, I guess would be correct. It's very important. Let's leave it at that. So when we have this zigzag here and the move to the C wave that went right to the 100% extension, when a zigzag ends, you retrace the C wave, and we went through just a nice normal trend channel here where you draw a line connecting the higher highs, draw a line connecting the higher lows. That gives you the channel, and we stayed right in there all the way till what we're supposed to do, retrace the C wave. So we went right back to where the B was. And then we came down and we got to the lower end of the trend line. We broke below it. We came back and tested it, also testing the 50-day moving average. And now we're moving back down again, which means prices on the 20-year are moving down, and therefore rates are moving up. And that probably has to do with that CPI report that came out today, and a little bit of concern regarding that. I really don't know how much inflation can come off the tariffs, because the tariffs that have been enacted are minimal so far. Lots of changing and moving dates and stuff. But anyway, that's just passing on what the rhetoric is on the financial networks and trying to help you make sense of it all. But this is a concern here that rates are starting to tick back up on the bond market. That's not what we want to see, especially if we're looking for the Fed to cut rates. And then taking a look at the TNX, which I know a lot of you like. This is rates on the 10-year. Just as a quick reminder, TLT is prices on the 20-year. Prices and yields move inversely. So with that showing prices down, that means rates are up. And then the opposite on the TNX, because it does reflect rates. So rates moving up, prices moving down, and we're kind of breaking higher here. So elevated rates, that's going to make it difficult for the SPY. If this continues over the next few days, I think that makes it challenging to get an upward breakout from this pennant pattern. So we'll have to see how that plays out. The market has trended down throughout most of the day from the open, and all that's playing into it. It's very difficult for the equities market to rally when the bond market is selling off, prices going up. So we need to keep a close eye on that and see where that plays out from here. Taking a quick look at the Dow. And I talked about this. I even posed this question in multiple avenues, including the U.S. market update, when it did look like the DIA could play catch up here. It had not gotten near its February highs, although the other markets had. And could it play a little bit of a catch up here? I'm not a Dow trader, so I didn't trade this, but it did. It ran straight up and moved a little more vertically than the other markets did. And since we've gotten to there, since we hit the February highs, that acted like a strong ceiling, and boom, bumped our heads. And now we're headed back down, threatening this holds into the close to break below the 10-day moving average on the way down. So we'll watch the close very closely on the Dow, and then you know what happens from there. We need to know if we have a follow-through day. So that would put a lot of emphasis on what happens in the markets tomorrow if we do close below the 10-day moving average. Always have to have a follow-through or confirmation day when you break significant moving average, break out of a trend channel, triangle, major support resistance. Any of those things require a follow through or confirmation day, because the market loves to give head fakes. And then the other side of the DIA question that I asked was, would you rather trade the DIA with that clean air up to its February highs, or would you rather trade the Qs, which had broken their February highs, the first market to do that, and are off and running? And it looked like you kind of couldn't lose either way. I would say that that move in the DIA was more vertical. So from a percentage standpoint, the DIA outpaced the Qs, but you would have done just fine whichever way you answered or traded that question. I tend to prefer trading in the Qs versus the DIA, just a personal preference. Found the DIA to be a little bit boring in the past, but certainly wasn't on that move. And we're a little bit above the 10-day moving average here on the Qs today. So hanging in there pretty well considering what's been going on, but being carried by NVIDIA and Broadcom and some of the big tech names today with NVIDIA's CEO Jensen Huang last night announcing that they would begin selling chips in China again relatively soon. So it sounds like his meeting went well when he was over there. So that's kind of carrying the cues so far in this trading session. We'll see what happens in tomorrow's movement. And then the IWM, which has not made 230 yet, it got awfully close. I did feel that we were headed to 220, and if we could break 220, there'd be a good chance that we'd go to 230 because that's where the February highs were on the IWM. Well, we didn't quite get there, and just like the rest of the markets, we're kind of trading down from where the open was. The highs of the day are basically the open on all the markets, and then we have a chance of closing below the 10-day moving average here on the IWM as well. So we'll watch that in the close, and then same story. If it does close below it, does it follow through again tomorrow? And maybe we don't quite make it to the 230 level. We did get really close to the lower end of that tap box time and price projection on this wave 5. Seems a little hard to believe that we wouldn't test the February highs, but the market's going to do what the market's going to do. And then we take a look at energy. If we go look at UNG, you can see that we're trying to get a little bit of a bounce here. At least for now, we're holding the 10-day moving average with a wave 5 low here that did get into the tap box. It could go lower, but so far it's trying to hold here. And a move back above 15 was key because that was support. That's why that trend line is there. And then we can go back and see where it was kind of a support resistance and congestion area back in the end of the last year. And so getting back above 15 is important, and holding the 10-day moving average obviously is next in line. And then if this can hold, can it get back above the 50-day moving average? I think energy is interesting here because it has greatly underperformed, and at some point in time there is going to be rotation from investment managers as the valuations on the big tech stocks just continue to get higher and higher, and at some point it's going to be just too much, and money will rotate into areas that have underperformed, where managers feel like they can get a better bang for their buck. And I think energy could be an area, especially natural gas. There was an interview with the energy secretary on CNBC this morning. You may have seen that, or we'll go back and watch that. But basically, talking about the expansion of domestic production, gives you a really brief rundown of what the gist of the interview was. And so here we have oil and hanging around the 75 level, which makes a lot of sense because that's been a key level, and it's within that 60 to 80 range where, as you know, I'm repeating this over and over and over again, but there isn't much else to say other than these two unusual spikes here, and this was the Israel-Iran war conflict. We've stayed within that range, and so can we hold 75 and break back towards 80 and move higher? Maybe, but OPEC Plus did surprise everybody by enacting a little bit more of a production increase than people would have thought. So it doesn't seem like they're willing to let oil get too high, and I think that makes sense. You've heard my opinion on that numerous times, is that they do want prices to stay elevated, but they don't want them to get out of control to where it pushes people into electric vehicles. They still want people to buy the gas-powered cars, but not have oil prices to the point where it puts a dent in that. So not much going on here with oil. Perhaps if natural gas gets a bounce, oil does as well. But I'm looking more towards the UNG than the USO as far as whether or not we can get any sort of a sustained bounce out of energy. So far, it hasn't happened. Let's go to the crypto space. That's been where things have been moving over the last few days. We had the two big up days, getting a little bit of a pullback because that makes sense. Yesterday was just a little out of control, a little too vertical. As you know, I don't like it when things go vertically. I don't like it when they gap up and go vertically. And I know that in real life, this isn't a gap, but this is the ETF. This isn't actual the price of Bitcoin. So remember, this is the ETF, BITB. And so the gap up, the vertical move, one goes vertically up, oftentimes comes vertically back down. So that's what's happening today, a little bit of give back, and perhaps we stabilize here. If you're long the BITB, you would want to see it hold in this area here above that wave three. That's what you would want to see right there. So taking a look at this pullback seems to be right in line with what needs to happen, not concerning at all because things just can't go vertically forever. Interesting that we got right to the exact middle of the tap box where the wave five was projected to go, and then we're backing off a little bit. So is that the end of the move? We'll see what happens from here. But I think if you're long, as long as it stays above this wave three high, you're okay. It could actually come down and test that before moving up again, or maybe it holds itself in here. A little better action out of Ethereum today. Been wondering if it was going to play catch up, and it has been a little bit. Didn't have quite the move yesterday that Bitcoin did, but performing better today than Bitcoin is. So it kind of balances out over the last two trading days. This is the ETHW, the Ethereum ETF. So it's ways for people to leverage using options on the ETF. That's why I show that. Sometimes people say, why would anyone trade the ETFs? Well, if you can trade options on them, then you have much better leverage than if you were just trading the actual security itself. So that's why. And we'll see if Ethereum can continue to outpace Bitcoin a little bit. All this clean air here. I really do think the ETHW sees 25, and we'll find out if that's true or not. We do have a gap to fill right here at 22 and a half. So perhaps this move gets us close to that. Actually, we're filling it now. So never mind, we've filled that gap. So now we'll see if it can make 22 and a half and then up to 25, but also like Bitcoin, a little bit above its 10-day moving average. So slightly overbought, maybe needs to pause for a day or two from here as well. I think maybe the CPI report kind of put a little bit of a dent here in the crypto space as well. But it's hard to say because it was just overbought. So maybe it has nothing to do with it. It was significantly overbought. And then we'll go to the metals, gold, taking a look at GLD. A lot of reasons to think that gold could break to the upside, but that is too good of a triangle, and we're not going to try to pick a direction. As you know, when you have a really nice triangle pattern, you don't pick a direction. It could go either direction, and you respect both moves. You can make a lot of arguments on why gold should break higher, but because of this pattern, you do have to keep the possibility in mind that it breaks lower. Silver yesterday was making a little bit more of a move than GLD was, and you can see how it's pulled back a little bit. Also got a little bit above its 10-day moving average yesterday. So in the crypto space, silver, some things got a little bit overextended, and we're playing backing and filling today as we move back down from that break move higher in SLV. Notice that the high of the day yesterday was pretty much the open, and it traded down and closed at the low of the day. So that gave you a bit of a hint that we were probably going to trade lower again today. So that all plays in together. And then we'll take a quick trip around the globe since we don't do that in the U.S. market updates. So taking a look at the Aussie market with the EWA, just sitting here in this area of support at 26. And I thought we were going to go to 27. This is kind of like the IWM. They got close to 230, didn't quite get there. The EWA got close to 27, didn't quite make it. Came back, formed the wave four right at 38.2% fib level, hit the 50-day moving average. We broke back up, and for now, we're just holding above 27. Still think there's a good chance that we hit 27, but we'll have to wait and see with this 26 level here. It's very resource rich, so maybe if we get a move in the resources, that's enough to propel it a little bit higher. But it's been a pretty decent run on the EWA following the April tariff tantrum lows, and then looking at Canada and the market that just keeps on going, even with all of the rhetoric that's been spouted back and forth between the U.S. and Canada regarding the tariffs, et cetera. And it just powered higher, almost in a straight line. One little pullback here, not even enough to create a zigzag in the wave three. And then today, if it closes here, we may close below the 10-day moving average here. And then once again, we'll look for follow through. Perfect example right here on this little pullback. We closed below the 10-day moving average there, but we didn't get follow through. We got right back to the 10-day moving average the very next day. So that's why follow through and confirmation is so important. And then we take a look at the Nifty and we'll see what's going on in India, and a little bit of a move down here. It looked like we might yesterday when we were talking to our subscribers at Evo Trader Live that we might be heading down towards this 50-day moving average. We did open higher here, but also pulling back, very similar to what's going on in the US markets. And I do feel like if we're coming down here, we tested the 50-day moving average in June, maybe we're destined to do it again here. However, if we hold the 50-day moving average, then you would look to say, okay, well, that's becoming positive, because then that would yield a bit of an upward trend line of higher lows. But speculating now, we have to wait and see what actually happens first. But the fact that we are trading near the low of the day, and whether or not we hit the 50-day moving average will be key there. On the Nifty, President Trump was across the pond yesterday, and you can see that Germany is starting to come back. We'll see if there's any sort of agreements from the EU here in the near future. But without that, and the fact that the ECB, European Central Bank, has gone on pause with the rate cuts, that's kind of put the end to this incredible rally that the EWG has had. And you've heard me make this comment numerous times as well. The economic data just doesn't support the kind of move that it's had, but that shows you how much equity markets like lower rates. When the central banks are cutting rates and injecting liquidity, equity markets like it. That liquidity finds its way into the markets, and it also spurs traders to buy, to go long. But now a little bit of a pullback, and we'll see if that's the end of the wave five there. And I drew this because this would be the corrective move. We could come all the way down here where this line is. Since that wave five went beyond 127%, we would not be looking for a move back down to the previous four. But that would be a pretty significant, let me try that again, pretty significant correction if we come down even to the 61.8. Maybe that doesn't happen. Maybe the wave five isn't finished, and we hold the 50-day moving average. We'll see, and move from there. And then last but not least, the economic numbers that came out of China last night were a bit better than expected. Their GDP, I believe, was over 5%. And so we're getting a bit of a bounce on the FXI today. As you can see, we had this triangle here. We do have a strangle on this in the volatility portfolio. And so we're getting a nice break, and we'll see if that continues in this mode. Would be counting as a follow through day because we broke out yesterday. If we hold this into the close, and it seems that we're probably destined to do that. So pretty nice move on FXI today. And again, we'll see if that follows through. So with that, Zach, I'll go ahead and open it up to questions, and then we'll get to our case study consideration for this time, or this week, I'm trying to say. Sorry, multitasking there.
No worries. Sounds like a plan. Let's get right into it. We have a question on Boeing from Trade Simple.
Good old Boeing. It doesn't look like they were in fault in that last plane crash, which kind of unfortunate event, but it looks like it was pilot error. Seems to be what the consensus is on that. And so that's allowed Boeing to continue higher. I've thought that there would be a bid in Boeing for a while because it just has been so oversold and so much bad news has come out. And you just wonder what else could occur. So it's gone through pretty nice consolidation here. Now it might be getting a little ahead of itself, though, to be honest, because we had this nice start in a 45-degree angle, but now it's starting to go a little bit more vertical. So if we change this over towards making it a bit more of the 45-degree angle line, that's how we started. And then, as what usually happens when you're nearing the end of a run, it doesn't mean that the overall move is over. You start to go a little more vertical. So see how that arrow is diverging from where it started coming off the wave four. Nice move there, right down to the 38.2% fib level, right off the 50-day moving average was a very logical place for it to bounce. And then you just wanted to see it take out that wave three high, which it did. Seems like there's probably a little more to the upside as we're nearing the bottom of this tap box. But maybe not too much more before a little bit of a pause. But yeah, thanks for asking for that one because I have been saying that I thought, if you had long-term money somewhere and were willing to wait, that Boeing would be a pretty good place to be. It's moved a little bit faster than I thought it might, but just felt like at some point there was going to be a bid come back into Boeing, and it has. So if you're long now, I might tighten the stops a little bit. But if you're looking for an entry, I wouldn't get in right now. I think that separation from the 10-day moving average, moving a little vertical. If you look at the DMI, we're on round two, meaning that we had the break above 20 on the ADX here. We got up, broke back down below 40. That created the wave four. It came to 20, so we're going back. So this is the second trip on the DMI. So normally that would show you that this move in the wave five is a little more tired than the move in the wave three. That's how Elliott wave works and seems to be kind of confirming that with the DMI. Another indicator that you can look at is the oscillator. And we'd want to see, if you really wanted to go higher, you'd want to see this oscillator take out this peak from May, where it was the peak strength. And just to give you an idea, kind of getting off course here, but good education, notice that the peak in the oscillator was on that high. And then we came down, the oscillator came down, and we went up and made the wave three high. So we made a higher high without a higher high on the oscillator. So that's what we're watching for now. With this new wave five high, we've yet to make a new high in the oscillator. Does it? If it doesn't, then that wave five is likely to end soon. So anyway, opportunity to talk about the oscillator.
Indeed. Next up, we have Alexandru and Amazon.
Good old Amazon pairs that the Prime days were a success, and the stock just continues to power higher. I know there was all kinds of speculation that who knew what was going to happen with the expansion to 4 days. The commentary seemed to be that people didn't think the deals were as good, that the discounts weren't as high, but they reported great numbers on the 8th, the first day. According to Amazon, they sold more than they did on Black Friday. So it was a really big day on the start. Maybe the consumer is starting to loosen up a little bit, but we'll have to watch over the next few weeks, especially with that CPI number today, and see how any sort of inflationary worries bring back a tightness in the consumers' spending habits. But Amazon's just powering higher nicely. If you're in a wave three, that's what you want to see. Just that nice, steady 45-degree angle move. And seems like 240 is in the cards for Amazon. We're at 225 now. You take a look at this DMI, and unlike the chart of Boeing, so we have the opposite here. When you're looking for divergence or confirmation, note as we're making a new high on Amazon here, at least in this run, not a new high from February, but on this run, notice that the ADX is higher. So it's kind of giving us confirmation on those higher highs rather than divergence, similar to what the oscillator is showing on Boeing. So always good to look for confirmation or divergence from your confirming indicators. But I like Amazon to move higher.
Alrighty. Next up, let's go over to FSM for Bruce.
FSM. Fortuna Mining. Ask about that before. Um, Sitting right here at this 6.5 level, it is above 5, so that part is good. It's going to depend. You can see how it's consolidating just as GLD is. A different kind of consolidation that SLV had. It was very sideways, a little bit more similar to this. Tried to break higher, so this seems to be trading a bit more with the chart of silver, where it tried to break out and it's back down today. But this is going to move. It seems like this is going to move with whatever happens on the gold and silver charts. Obviously, they're consolidating. This is consolidating. I'd be concerned if gold breaks to the downside. You'd want to wait and see if 5 holds. That would be the key level. So yeah, there would be risk all the way down there if the triangle breaks to the downside on GLD. But if it breaks higher, then we could go higher here. But it's got work to do. It's got to get up to 10 somehow before it can get the most amount of the majority of institutional interest. It can only have institutions that have aggressive growth as their investment objective, owning it. So if there is institutional interest, it needs to get a little bit higher. And then a great deal of money could come into it, but it's got a ways to go first. It does seem like there is some support here. So I don't know if this is a meme stock or not, but there was some pretty good volume back there on the move up that occurred in early June. And right now we're just consolidating. And I think I would wait and see what happens with that chart of gold. And then you should have some room to trade it directionally either way. But this is the line in the sand right here at 6.5.
Very well. Next up, we have Kevin for ALB.
Yep, broke the wrong one. Hang on. There we go. All right, so with ALB sitting above the 10-day moving average, sitting above 70, this is a key area right here. There was resistance from back in February and March, and it was able to break through it. You can see it went up here. Put the arrow on because I know sometimes you can't see the cursor. So it went up to 70 here, back down, tested 10-day moving average, and then broke above it. And now we're testing 70. So this is a pretty easy read here. Just watch what happens with 70. If it can hold this level and bounce, then I think you see 80 pretty quick. And if it can break above 80, where there is a little bit of resistance there, if it can break 80, then it's clear up to 95. So you could have some upside room here. But first things first, we got to hold 70. Got to keep an eye on this 70 level. You don't want to give that up. If you do, then we could come back down and things have to start all over again. So holding this 70 level right now is important. So once again, if it bounces from here, I think you might have a good trade up to 80 and maybe even higher. But again, first things first, it's got to hold 70.
Thanks, Rob. Next up, we're going to go over to a question from Lori. If possible, could you take a look at the ascending triangle of Goog, Goog?
Yeah, I actually just sent out an alert to our alert subscribers in the speculative portfolio yesterday because it doesn't quite follow all the rules, but sure looks good. It's got virtually the exact same signal as the SPY does from the AI. It's 63%. It's got a nice zigzag pattern. I know that's not what you're asking about. I will get to the ascending triangle, but a nice zigzag pattern here where we're kind of looking at areas of where it could go. The 100% extension, that would be the extended level. So if it moves higher, it's got to move higher from here first. 61.8 is the first target, as you know, when you have a 38.2% B wave correction. So this is assuming that we will break above the 61.8, giving a nod to the AI, again, a little better than a toss of a coin. But, you know, it's a 2/3 chance. So there's still a third chance it doesn't happen. And then looking up here at this 100% extension, if we break above 61.8, then I think that helps give credence to the AI target because that means we're likely coming all the way up to the 100% extension. So the key here for Google is right where we are at 185. And notice that if we close there today, we would end up with a doji on the chart. So here is your ascending triangle pattern. If I just extend that and then this level here. There's the ascending triangle. And note that ascending triangles do not guarantee an upside breakout any more than descending ones do. You heard me say this over and over and over again because it drives me crazy. It's just easy marketing of they normally break to the upside on ascending, downside on descending, and the data just doesn't show that. So you have to respect both directions on either one of those, and you already know that on symmetricals. So we tried to break up yesterday, and the key is going to be, can we hold this as a follow-through day today? You don't really want a follow-through day to be a doji, so we would like to see Google gather itself towards the end of the trading day and close near the high of the day. That would be ideal. If that happens, I would say that we probably are getting an upside breakout. We're probably going to hit the AI target, and we're likely going to hit that C wave 100% extension. But all eyes and everything depends on whether or not we can follow through with this follow through day, if you will, today. And I would be a little concerned if the follow through day ends up being a doji. As I said, that's not what you want. You don't want a doji for a follow through day. So let's see how Google trades from now to the end of the day. But yeah, I like that one as well.
Next up, we have Raphael, RGTI.
Yep. Getting into the quantum world here, and the concern here, and you know, it had a big bid coming out those April lows, but right now we've got a lower high, and we are holding right around the 10-day moving average. We tested the 50-day back in June. All that's good. Really non-committal out of the DMI, shorter term. Maybe we're getting a little bit of a tick up. It is positive that it came back down towards the zero line, but you want to see it kick back above that positive 100 level and give you one of these shadowed looks where it gets above the level you would expect at positive 100. But the key here, if you really want to be long this, you want it to break this high. If it can break that high from early July, then maybe it's off and running again. But for now, you know, you have to look at that trend line of a lower high. And then if it continues that and doesn't go up and take that high out, are we making a third lower high? And then that would start to look like descending triangle formation is occurring because clearly around the $10 level, which you would expect, as I just explained, the importance of the price levels regarding institutional ownership, you would expect that the institutions would come in and support that $10 level. maybe that yields a upside breakout. So it looks like it's consolidating now. I feel like that probably is going to continue. Um, I don't know when their earnings report is as we're moving into earnings season, but um, we gotta if you want to go long, if you're already long, I'd stay long as it held above this support level. But if you want to enter long, if you're looking for a new entry, it would make more sense to wait until we break above this high here from last week.
Let's head over to ZG.
Zillow Group. Let's see if it's moving up. Yeah, I mentioned this. Um, was it yesterday or was it Thursday night? All these events seem to run together after a while, Zach. But it's talking about how there seems to be a little um, relaxation where the home builders were quite concerned and very tight with the fact that the housing market had seemed to come to a bit of a halt, but it seems to be loosening up. We'll see how these rates going up affects things, but the fact that rates came down a bit was helpful, and that allowed for the upside breakout and a little bit better readings on um, sentiment from the contractors. But there's that ascending pennant pattern, very nicely formed here. Little shallow, but formed, really well formed. You can see that's a pretty good ascending triangle, but we're almost to the point where you would expect the breakout move to be. So the bottom of the mouth was 60, the top part 70. So you're expecting about a $10 move from the point of the triangle. And let's see, I think that's about what we got. 70, no, didn't quite make it. Maybe there's a little more upside to go. We were a little bit overbought because we had this nice vertical breakout, a little bit overbought, and now trying to just back and fill a little bit, see if that can hold and continue higher. As long as rates don't get out of control, I think that that's very possible on Zillow as again a little bit of renewed interest in the whole property real estate market, but it's going to depend a lot on what happens with rates. If they start to move a lot higher, maybe today is just the move because they don't think the Fed will cut in July and they're taking that completely off the table, and that could be the tick up in rates today. But we got to watch that and see if that continues. I know it doesn't seem like rates should affect Zillow, but I really think they will.
Very well. I've got a couple of symbols for you from Ringo, MP.
MP, MP materials. Whew, goodness. I can see why you ask. Um, if you've been listening, you know what I'm going to say, though. No way I can chase that move. If you caught that, congratulations. If I was in it, I had options, I'd be taking them off and take that IV spike. Obviously, um, can't give you individual investment advice, and you should do what you're comfortable with. But this move higher here for me is too vertical, too much, too fast. But again, if you caught that move, congratulations, you're having a really nice day. But it's too far away from the 10-day moving average, too vertical, multiple gaps here. Just feels like that's maybe a bit of a blow off top. Maybe it does continue higher from here, but there's no way I could chase that kind of a move. It's just too overbought. But if you look at the DMI, it looks pretty solid. So maybe after some backing and filling, it's not done going up. But that IV spike that's being put in there will go away because stocks don't continue to go vertically like that. So once it starts to go sideways, the IV will come out of the call options and make them worth less, even if the stock doesn't come down. So that's what it's talking about, is what I'd like to take advantage of on big up days like this.
All right. CRDO to follow that up.
Burrito technology. Little more my style of a movement up here, like this nice steady crawl up on this 10-day moving average. The problem is now we're hitting one of those big round numbers, the 100 at level area. I tried to say combine those two words, but the tractor beam effect has occurred here. We got to 100. Oftentimes, that's where people sell. They take profits there. They expect a level when the stock gets above 85, high probability that it's going to go to 100. So once it gets there, it could be an opportunity for some people to sell. It has broken above resistance at 75. So once again, breaking above that level was pretty much your indication that 100 was in sight. So that's the concern now is can it continue to move higher, power higher above this 100 level? If we look at the DMI, it's showing the ADX is coming back down. It hasn't broken below 40 yet, but it's getting close. So I would be concerned here. If you're long this, I would tighten your stops and see if it holds that 100 level, or if people use that as an excuse to take some profits on a real nice run. I mean, you look at it, it's gone from 30 to 100 since those April lows. That's one heck of a move. And at some point, it needs to consolidate a bit. And this 100 level might be what spurs that on. But nice, nice move up there. And you can see the 45-degree angle. The reason I like it is the corrective moves just aren't that severe. That's why you want the 45-degree angle. A lot different than when stocks go vertical and they can have vertical corrections. You tend not to get that when the stock moves in a 45-degree angle like this.
Thanks, Rob. I see we're a minute after time, but I also am noting that we had the delay in the beginning due to unforeseen power outages on my side, and so we had a little bit of a late start. You got time for a couple more before the case study consideration, or do we need to head to that now?
No, we can go ahead and do two more.
All right. Let's follow it up with NAK for Manuel.
Oops, sorry, clicked the wrong one. Kind of along the lines of that MP materials, pretty vertical move. Don't know anything about this company. Obviously, it's just come public. Or maybe it just moved to this exchange, not sure which. But that's a very vertical move. I don't get into these low dollar stocks too much. And I don't like the vertical moves. When you have a newer stock like this, I don't know where the valuation may come in. But yeah, sorry, with so little data to look at here, it's difficult to make a call one way or the other. Just if you're long this, I would keep tight stops on the vertical nature of the move. It's pretty much moved $1 in 2 weeks on where it was 125. Now it's 225. So that's a heck of a move. And again, I don't really know enough about it to think if the valuation's good there, if it looks like it's going to go higher. I no real technicals here because not enough data for the pattern. But if you caught that move, congratulations.
Question from Chris. Can Rob comment on Apple? It's forming a somewhat complicated triangle.
Apple is is just a mess. They're calling for Tim Cook's head because they just haven't been very innovative. It's been one of the things that I've complained about for quite some time. They're just resting on their laurels. They have been, and people are saying that's what happens when you have an operational guy like Tim Cook versus an innovative person running the company, and that's what they need. And get back to the days of making really cool new products like Apple once was. So as far as that's concerned, you got the news that never good when they're headhunting the CEO, but not headhunting in a way of trying to attract an employee, but asking for his head, basically. And I don't think that'll happen, but you know, Apple blew their um, conference that they had, very underwhelming on the AI, and just going elsewhere, doing deals, buying another AI company rather than innovating on their own. That aggravated a lot of the longtime shareholders. And so we're just stagnant here, right at this 210 level, which is key. So we had this triangle here. We broke out, and now we're consolidating at a level that you would expect because that was resistance back there in April and May. And where can we go from here? We do have a little bit of a I would call this a descending triangle. I think one could argue on the symmetrical side, but it looks to me like that is a better formation of the triangle. It's not very large, so it's not calling for too much of a significant move. If we break down, basically, we're coming back to the point of the breakout of this triangle back at 200. If we break to the upside, then perhaps we're on our way to where that C wave could extend up above 220. And I've always mentioned that very difficult to short Apple because they have so much money that they can come in and do stock buybacks of a significant amount at any point in time. And that makes it difficult to try to short the stock. So I tend to look for better opportunities to go long. We did get that nice upside breakout. That stalled right here at 210. So that's the way I see it. How it handles this 210 level on this smaller triangle is going to determine whether we power up from here or go down. I actually think that if by chance they were to replace Tim Cook, that could really propel the stock as there would be expectations of more innovation coming from them. That's the way they would view things.
All right. Well, per usual, we still have lots of outstanding questions, well thought out questions. But I do see we are running a bit over time. And again, that is on my side, folks, not Rob. I'm just here in Florida, and Mother Nature is having its way for this week so far. But Rob, up to you on if you'd like to continue on to the case study consideration, or I know you have to get back to the markets here soon at some point. So I'll leave that with you.
Okay. We started 10 minutes late. Give me two more. We'll take two more. Then I do have to get back.
You got it. Sounds good. INTC for Trade Simple.
Intel had a nice upward move breakout. Familiar with this one. We had a strangle on it. It waited a little bit too long, so the time decay, basically it's going to end at right around the break even level, but it hasn't broken out far enough either. So if it had broken farther, that would have been helpful as well. You can see how long this formed, very long forming ascending triangle pattern here, and breaking to the upside. Just can't seem to gain traction in this space. You see the chart of what AMD is doing today, and you'd like to see that out of Intel, but it just hasn't done it. But maybe we can hold the 10-day moving average and just proceed in a more orderly fashion here. So if I was long Intel, I wouldn't get out, but I would watch that 10-day moving average rather closely here because at some point in time, it could come down and test this area of resistance that it broke out of right around 22.5.
All right. And the last symbol for the case study consideration will be NEO for Lisa.
NIO.
NIO.
So I haven't looked at NEO in a while, but that's interesting that you ask with the FXI breaking out, the economic numbers better in China, the fact that the US and China seem to be playing nice, the fact that Jensen Huang of NVIDIA seemed to have a good meeting over there. Everything seems to be leaning towards the tension easing between the US and China. So pretty much anything, Alibaba having a good day today, pretty much anything China-based right now, I think is very interesting. And NEO has come down significantly from where it was at one point in time, if we go way back. But this is a pretty quick move here. We're at a little bit of resistance, as you can see, from those ways of the lows back in February and March, and it was those highs at the end of April and May. Now we're back there testing it again, and we're a little bit separated from the 10-day moving average. So if you haven't heard me say this before, you don't want to see a resistance level broken when you're already overbought, because it tends not to hold. It's too extended, and breaking of resistance, it just runs out of ammunition, runs out of gas, runs out of fuel, whatever you want to say. What you want to see, for a better attempt at a break higher that holds, is consolidation right here. Consolidate under this level of resistance, let the 10-day moving average catch up. So go sideways for a few days, then break. So gather energy and momentum, and then break above that 425 level. And if it can do that, 5 is probably next. And if it could somehow break above 5, then things could really get going on NEO. But I think you're in the right space. I do think that, anything regarding China right now, barring any change, but with all we can do as technical traders is analyze the information we have at any given moment. So with the way things are right now, I think that you're looking in the right space, and anything China is interesting right now.
Alrighty. Thanks, Rob. I'll let you wrap up with your case study consideration for this week.
All right, we are going to borrow one from the AI. It's again a lower number, but I'll show you why I like this. If you take a look at this chart, you can see on Fastenal, FAST is the symbol. The target price is going to be 47.5, which is lower than the AI target because that's where the extension level is on the Zig-Zag. It's a very nice Zig-Zag here, 61.8% B wave. Now, with that, that means 100% is the first target. We're already there. So the Zigzag's already done what it's supposed to do. So that's worth noting. But it does look like we're trying to break above that. And if we do, then there's a really good chance we go up to 161.8. And if we get there, perhaps we actually even extend up to the AI target. But that isn't our target is going to be this fib level at 161.8. And if you look at the DMI, you can see that pretty good setup there on the DMI with the ADX moving higher above 20. So it looks pretty strong for a continued move there. And then looking at the CCI, maybe we pause here for a day or two as we're at an extreme point high, but we've been spending a lot of time above that positive 100 level. So that looks good. So I like this one. So this one will actually be an idea, and we will see what happens. But that's it. Moving towards 47.5 on FAST.
Very well. Thanks, Rob. I can go ahead and take the screen and hopefully be able to keep the bandwidth to get this idea posted for today's idea. And here we go. Should be able to see my screen now. All right. So as we see here, we're at a menu view, a jumping off point of everything that this platform has to offer. We're going to go up here to this right toolbar to click on ideas, light bulb there, and then go over to the left toolbar to navigate to new idea and create an idea. As I've said, for those who've been loyal listeners for quite some time, you can always equate an idea to paper trading as if you were paper trading with your brokerage, therefore getting all the same data and the transaction, all of the criteria remains the same. It's just you're not putting any actual risk or capital on the line. It's kind of like monopoly money in a sense, paper trading. However, this is going to be all of the real-time data and information that you would get as if this was a real trade. Our target price for fast, as Rob said, was 47.5. Is that correct?
Correct.
And the time frame we're looking at for that.
Um, well, go ahead and show the, we'll leave it at 3 months.
3 months.
3 months is good. Yeah.
All right, sounds good. So as you can see, we have these fixed intervals of time. I think Rob was considering before was that we can also come down here to custom if there's a more specific amount of time or a period of time rather that you're looking for the idea. But we're going to go with a quarter out on this one. This will be made nice and pretty here right after this session is concluded. Going to go ahead and confirm and post this idea or publish this idea rather, so you can see it's now available on the platform for you to come in and interact with. Just to click on one here to show you a quick example, you always have the capability to agree or disagree by selecting these buttons up here at the right side. And then you can also comment any of your thoughts on any of the ideas that you see on this ever-growing platform. We just always encourage you to be considerate of everyone on the platform. Always feel free to, of course, voice your opinion, whether it's agreeing or disagreeing. Just you can always do that in a positive manner. As Rob's mentioned, there's no need to ever take things out of context. Just provide your thoughts, whether you agree or disagree. And I'll wrap up my soapbox, Rob, on the phrase that I usually say that if everyone agreed on the trade, there'd be no transactions to occur. There'd be no trades to be had. If it was all buyers and no sellers, as we know, that wouldn't work. So we have to have opposing opinions to make markets, and we welcome that, whether you agree or disagree for any of these ideas. So I'll stop rambling on and pass back over to you, Rob, to wrap this session up.
All right, so leave you with the chart of Fastenal. I do agree that be respectful. There was actually an incident on CNBC this morning where there was a guest on earlier this morning that was less than respectful to Andrew Sorkin. So, yeah, just be respectful. Love opposing views. Everybody learns from that too. If somebody else seeing something different than what you're seeing, it's a learning experience, and then find out who's right in the end. But we're all going to be wrong at times, every one of us. So no reason to be disrespectful about it. Thanks for your attention. Again, sorry about the late start, but can't avoid Mother Nature, as I mentioned in the beginning. Enjoy the rest of your trading day. Watch for where some of those issues close today, and then whether or not we get some follow through tomorrow. So the next couple of trading days will be important for a lot of different charts, and obviously see how the bond market follows through with the negative reaction to the CPI report today. So enjoy the rest of your trading day. Look forward to telling